There is a mistake almost every retail investor makes when building a retirement portfolio. You judge your portfolio entirely by its short-term spot return. And worse, you let those temporary numbers drive you into making permanent, disastrous decisions. You look at your wealth as a static pie chart. You create a fixed percentage of stocks and bonds, and you blindly hold them, hoping the market is kind to you. That is not a strategy. That is a permanent state of vulnerability. Retail buy and hold logic tells you to simply ride out the storm. But in a systematic architecture, we do not just survive volatility, we exploit it. Today, we bring all 6 segments of our portfolio together. I will show you the exact synergy of the machine in action. To run this machine, we strip out human emotion and replace it with mechanical triggers. We rely on a dual compass, the Volatility Index, or VIX, and the Fear and Greed Index. These are not emotional gauges for the evening news. They are strict operational sensors, dictating our capital deployment. And the fuel for this engine? Our cash segment. We maintain a minimum of 5% in absolute dry powder, ready to be weaponized across 3 operational states. Let us start with Condition Red. The crash. The VIX spikes above 30. The Fear and Greed Index plummets below 10. This is extreme fear. The financial media screams that a catastrophic market collapse will wipe out your retirement. Amateurs panic, read the terrifying headlines, and liquidate their life savings. We execute. The machine automatically triggers the deployment of our dry powder. We aggressively channel cash into our core compounders and low-attention segments. We are buying long-term structural growth assets at a minimum 20% discount. These are the exact same positions that amateurs bought when they were dangerously overvalued, when all the upside was already priced in. Now, we buy the blood. Next is Condition Green. The hunt. The VIX drops below 18, and the Fear and Greed Index sits comfortably above 50. The environment is stable, and strong market momentum is clearly established. The amateur gets complacent. The architect gets tactical. Because market momentum allows us to mathematically ride the prevailing trend, our foundation is secure. So, we deploy capital into our tactical segments, our asymmetric optionality, and our volatility harvesters. We actively extract yield. We capture short-term catalysts. We ride the momentum to generate alpha, while the market is asleep. Finally, Condition Gold. Extreme euphoria. The Fear and Greed Index blasts past 80. The herd is greedy, throwing leverage at overvalued assets. We play defense. The machine dictates that we mechanically trim our tactical and asymmetric positions. If valuation multiples are extremely overextended, we may even trim our long-term core holdings. We harvest the profits and sweep them directly back into the cash segment. We reload our ammunition, lock in gains, and wait for the next Condition Red. This is how the system works. Cash flows mechanically between segments, based strictly on the numbers. No guessing. No fear. No hope. Process must always come before precision. Stop managing your life savings like a retail gambler and start building your structural firewall. The exact mathematical constraints, the rules of engagement, and the entire visual framework are fully built and waiting for you inside a structured Notion workspace. Click the first link in the description right now and step inside the 6-segment architecture blueprint. See the framework, build the machine, remove the emotion. I will see you on the inside.